Hey folks, welcome to Tuesday Live. Ask any questions that you guys have, and when it comes to mortgage related questions. So on this channel, if you're new to the channel, what my goal is here is to educate and inform you guys everything in real estate, especially the financing options. So we're trying to redo this YouTube thing that we're working on. We just hired actually Mr. Beast's YouTube consultant, and we'll be starting that in about 30 days, and hopefully we can provide you guys more value with more entertainment and better topics and just an overall better experience that you guys are seeing. We're starting to see stagnation here. So what we want to talk about today is any questions that you guys have in regards to the mortgage process. Now, it's probably going to be a slow day because a lot of people are dragging their butts back into work today for the first time in probably 4 or 5 days. So you might be sitting back, or we might be a little bit slow today. So if you have any questions, please post those. As you guys join us, just let me know where you're coming from. Just say, hey, California, New York, New Jersey, Florida, whatever. As of tomorrow, we should be able to help you anywhere in the country. So for those that have been holding out, if you're in New York and New Jersey and Utah and Birmingham or wherever, reach out to us now. We will be federally exempt, and we'll be able to help you all over the country. So that being said, I'd love to answer any mortgage related questions that you guys have, but just giving you some context as we're waiting for people to join us. Hey, we got William. Hi, Dan. Hold on one second. Let me just go through the context that we have here so you guys don't miss out on anything that we have to offer. So here's some of the stuff that we can give you or provide you so you can do your own research and learn. Education's the key. Go to our website or our YouTube channel. Here's a YouTube channel. There's over 1,200 videos, and there should be something there that tickles your fancy, or at least answers the questions that you have. If not, shoot me an email or send a description down below. Let me know what you're looking for. So that's that piece of it. Our website, you can go here and basically do almost anything you want. Go here, you can chat with us, you can call, you can apply online, you can do anything and everything to schedule a calendar event there. We have a credit website to help you guys when it comes to your credit scores. If you need help there, you can get free scoring systems and the whole ball of wax there. Facebook channel, we got Facebook, Instagram, the whole ball of wax. But what I want to just go over real briefly, if you're building a house, please avoid this place. So let me bring this into context. What's going on right now? And then I'm going to answer any and all questions that you have. Here's what's happening. We ranted and raved last week that we had a person that we were able to help buy one of these homes, and they pulled the rug on us. So here's what's happening in the background. So this is where I want you guys to be comfortable in what you're doing. So if you're building a house, please, first thing, get an attorney, review the contract. Here's what's happening behind the scenes. We had a client put a house under contract 1 year ago, from basically right about now. And we were ready to close, or we were basically waiting on a few things from the builder to close on the loan. It was documentation like water certs and the whole ball of wax and the appraisal. So the builder put off the appraisal because the house wasn't done. The appraisal just came in last Thursday. So that's the delay from the builder on that part of it. And the builder also sent us all the documentation we've been requesting since last month on the 20th. They just sent it to us on Tuesday, and they said, you're going to have 3 to 5 days to close. Well, most of that is against the law. I can't get the close a loan without what's called the closing disclosure. That was sent out on Thursday night. That's why I was ranting and raving on our YouTube live that it got signed and so forth. But there was the delay in the signature. So we aren't able to close today. We had to postpone it till tomorrow. The builder pulled the rug. They're saying, nope, we won't give you even a 24-hour extension. We're basically going to give you the money back, and we're going to resell this house. Why? I hate to say it, but the house appraised for like $30,000 more. So this is what's coming into play. All right, it's pretty crappy. I called the county, the city inspectors. I called everybody and anybody that I could to help us. Basically, they said it's a civil lawsuit that needs to be claimed. So if you're working or you're looking in the Orlando, Florida, or anywhere in the country, be careful, please, if you're looking at Focus Homes, because if you do not use their lender, they might throw some curveballs at you so you cannot close. Just saying that out. I have all documentation. We even reached out to them for comments, and I provided them with all the documentation that we have to show that they basically delayed this thing, and they're like, sorry. And they sent the client a letter today saying they're going to send his money back. So please, please, please be careful if you're building a house, because the contractors, they know how they can sell the house for more money today, and they're doing such. So again, please give us a thumbs up as you come in, and let me know where you guys are coming from. are you in California, New York? We can help you in New York. We can help you in New Jersey. We can help you basically anywhere in the country now, well, as of tomorrow, because we'll be federally exempt and we'll be able to help you all over the country. So let's get on to why you're here. Let's get to the questions. So the first question we have is from William. Thanks, William, for joining us. Hi, Dan. I optioned a new construction house back in October of 2021 at 261, and currently it's at 310. They hope to finish by, should I stick with it? Yeah, but here's what's happening again, what I just explained. What's happening with some of these builders, they know that they could sell it for $40,000 more than you have it under contract. Are they going to put the kibosh on this thing so they can get out of selling it for you so they can make some more money on the sidelines? So what I'd highly suggest you do is get an attorney. I don't care what state you're in, just get an attorney to review your contract to see if it's basically just skewed. And with the client that we're working on now, I read the contract. I see nowhere in the contract, and I've read this thing probably 20 times. I see nowhere in the contract where it says they will not definitely give a 24-hour extension. I've done this 33 years. I've never had that happen one time. So if you're building a house, I'm not saying don't do it. I'm just saying be very, very, very careful. Check, just like you would check on me. Check their reviews, check everything and anything about them. But I don't know if this is common theme throughout the industry. So if you're having horror stories like this, please comment down below. But William, I wouldn't pull out. I would just have your documentation reviewed. Hopefully we're doing your mortgage for you. If we're not, please send me your loan estimate. I'd like to review it and see if we can give you a better deal than what you're getting, and then we can help you work with you to get you closed on time, because we're learning the hard way from some of these places. But we can't help it. If they don't give me the last document until 2 days before closing, what happens at the end of the procedure of all this is we have to issue a closing disclosure to you, the buyer. Okay, you have 3 days by law to sign that and do everything else before we can close. Well, they know this. So they give us the documentation right at the brink of that 3 days, and basically gives us an hour to get everything done, if that. We don't have just one client. We have hundreds of clients we're working on. So if we delay for an hour or two, you shouldn't lose out on a house. So I even reached out to the builder, the vice president of the building association or the building company. Again, it's right here. Please be careful, because they're like, we disagree with your insinuations. I'm like, I'm not insinuating anything. I can show you fact. You guys have, basically put this on the back burner so you can botch this whole deal. So that's that piece of it. Next one is, hello, Dan, do you provide services? We do as of right now. So thanks. Call us in. Go to the website, apply online. But I would say just call us or set up a calendar event. You can do that right on our website, and I'll take you there to show you how that's done. Just right here, when you're up in this area, just apply here. You can hit the call button or call now, call us there, or book a meeting. Most people do this, so then we can set up a one-on-one consultation for you to explain or go through. I always say go through the story. What are you looking to do? Why? What obstacles might there be, or anything that we should know about to prevent any big hurdles down the road. But yes, right now my team should be able to at least talk to you and consult you about New York. So give us a call. And let us, there's a couple guys that already transitioned over to the federally chartered system, and you'll be able to speak with one of them today. But you can do that all right here on the website. Give us a call, apply, and everything else. So thank you, NV Me. Thanks for the comment. If you guys are here, please don't forget to give us a thumbs up. We have one person that gave us a thumbs up so far. Come on, guys. It's not that hard. Would you take out a 401k loan to do the down payment on a house to get a lower PMI cost on a conventional loan? Would I personally? Me personally, no, I wouldn't. I would finance it. You'd be amazed on how much little your difference, your payment would be. But I get where your point is, where you'll avoid the PMI. So, but the tough thing about right now, the stock market is so down that you're selling at a bottom there. So me personally, let me read the PMI piece. Would I do that to avoid PMI? It depends on how big your loan is. If you want to post how big your loan is, if the PMI, you're paying is 50, 60, 70 bucks, if it's 300, 400, I might do that. It depends on how much money would be needed. And again, the reason why I'm kind of leery of that is the market's already been pummeled, the stock market. So to sell out now, that's tough. But if you could just take a loan against it and pay the money back to yourself, that might be a good equation. So if you break it in piece by piece, your question, would you take out a 401k loan? If it's long as it's a loan that you're paying yourself back and don't have to liquidate anything, might not be a bad idea. Okay. So let me rephrase that as I think about that a little bit more. But again, it's the PMI piece of the equation. How much is the PMI, or how much are you talking about? Is there another way to get those funds? But the best way to do is to get a loan, don't liquidate it and take cash out. And then you're going to have all kind of penalties when it comes to that. But that was a great question. And I'm sorry, it kind of threw me for a curveball. It's Tuesday and had a long weekend. So as it sinks in, I can answer the question better and better and better. Envy me, thank you so much. Thank you guys for tuning in on a Tuesday afternoon when you had a long weekend and everybody's probably dragging today. So please ask any questions that you have. That's the whole point of today, is any questions. I don't have anything on my agenda to teach you or show you. I can go over some things. If you have any questions here, on future videos that you would like to see, let me know. But let's go back to the next thing. Okay, Q. So you've been here before. If you put a Q in front of your question, I know it's a question, not just a statement. So thank you so much there. So we have Radha, thank you for posting the question. Should a loan close before conditional loan approval expires? Rate locked 180 days, but conditional approval expires. What's probably going to happen is the conditional approval expire. You'd have to read why, because you really can't get a 180-day or 270-day or 360-day lock without some contingency approval pieces of the puzzle. Let me explain it to you. Your credit report, depending on if it's an FHA, VA, USDA, or conventional loan or jumbo, is only good for a certain duration of time. So usually on conventional loans, it's good for 90 days. FHA and government-sponsored loans usually good for 120 days. Well, if your rate lock's 180, it's going to exceed that time frame. So your conditional approval will be based on the time duration that the credit is good for. Then after that, really all you really need to do is a few things. One, we have to repull credit. So please don't go out there and refurnish your whole house, get a new boat, new car during the time you're building a house or in this process. It's gonna hurt big. Okay, that's the number one thing. Also, what's going to be expected of you, you're going to have to provide them updated pay stubs and assets, because what happens is all the paperwork that you provide us has to be good or updated within 30 days of closing. So let's break this down. You're not closing for 180 days. So let's say that's 6 months. So let's say you're in November. In your case, okay, let's just say you're in November. Well, we can issue you a pre-approval today, conditional approval, whatever you want to say on that piece of the puzzle, but your rate's only going to be locked. Well, your credit's only going to be good for about probably 90 days. After that fact, we have to repull credit, but we're going to probably wait because we don't want to keep repulling. Okay. Also, your pay stubs. Don't quit your job. Don't furlough. Don't take a 3-week vacation and go back. Please continue to do everything you're doing as is now. All right. Because we're going to need new pay stubs, new bank statements, and a new credit report. Everybody, and I'm just saying everybody's going to need those things. So as long as it doesn't vary huge, you're okay. Okay. But a lot of this is in your control, the consumer. Again, don't go out and buy a new car, right before you close. We're going to find out, because what happens is right prior to closing, the lender that we're using is going to do what's called a soft pull. They're going to pull a soft credit report on you just to see if you did anything. And that's when it'll come up, hey, you just bought a boat for $500 a month. Or you just bought a car or this or that, or you fell delinquent on 2 or 3 counts. Guys, try everything you can. Don't overspend. Don't buy anything new, and keep up with your bills. Okay, so that's that part of it. But that was a great question. Appreciate the comment there. Next one is, it's a buyer's market now. Wait a little bit. I'm going to try to get out of the prediction of the housing market. What I'm going to try to do is, and this is where I intended from the beginning, is to dive in the financing part. You guys decide, and I'll give you my 2 cents if you ask. You guys decide if it's a good time or not to buy. There's so much conflict that I'm having with realtors and people and everything else that none of us know what tomorrow's going to bring. We don't. So whenever, I come out and say, I don't see housing crashes, I'm a bad guy or this and that. So I'm going to stay away from the predictions. What I'm going to stay is in my wheelhouse, what I know. Okay, I know the financing part of the business. Been doing it for 33 years. I can show you trends and all this other stuff. But I want to be your mortgage advisor to advise you the program. What program's best? Why? Okay, there's a ton of programs out there. Non-QMs, conventional, jumbos, ARMs, fixed, this, option ARMs, FHA, VA, USDA, reverses, 203Ks, 203Bs, all this stuff. If you don't know what I'm talking about, that's why you need us. Okay, these are the things we can scrub and say, here's the program you fit in and why. Okay, I'll also go over rates. I'll do that every morning just to give you an idea where rates are. But as you guys know that follow me, the rates I post every day are not my rates. It just is an indicator what the market is doing. Is it going up or down? So what you should see, if you got a quote even from me and we didn't lock you in, if the next day I post, hey, rates are up a quarter point, well, your rate's probably going to be up a quarter point. So I'm going to get away from the housing predictions and the housing crashes and all the clickbaity stuff. I'm here to educate and inform you guys everything real estate, especially the financing part, or I'll say mainly the financing part of the equation, to explain this to you, to explain what section A of the loan estimate, why that is the one big important piece of the loan estimate you should review and why. Okay, so those are things that we're going to talk about. Let's go to the next question we have is jumbo loan versus ARM for a non-first-time home buyer that needs to buy a home, loan for $1 million. Jumbo loan versus ARM for a non-first-time home buyer that needs to buy a house. Okay, I would it's going to come in with a lot of variables, but it's a $1 million property. First-time home buyer, it's just saying a single-family home. I'll just guess on this part of it. I would highly weigh, and this is what I do. When we're looking at this, what you're asking, I guess, is conventional loan, should you go with an ARM or should you go with a fixed rate or whatever? What I would do is I would analyze it and say, okay, what's the differentials? What's the risk? What are the trigger points of the adjustable rate and such? Here's what I mean by this. Your rate on an adjustable rate. Let's say the 30-year fixed today is, I'm just going to round it, say 5. It's not 5. I don't know what it's going to be. But the ARM rate is, there's a huge amount of variables. The first number in the ARM rate is how long that rate is locked for. So if you have a 5-1, it means it's good for 5 years. Then every year after that, it's going to change. Every 1 year after that. A 5-6 is maybe a 5 with a 6-month adjustment and so forth. Well, if that rate isn't at least a half or 3/4 different, I personally wouldn't suggest going in with an ARM rate, because when that thing does trigger 5 years or so from now, who knows where rates are going to be. But what you got to look at is, what's your intentions? Do you plan on staying there a long, long time? If you do, let's work the numbers, or let's do the numbers to see how much would you save over that time duration, 5 years, maybe 7 years. Let's look at a 7-year. 7 years is the sweet spot right now. Let's look at 7 years. Where would your balance be? What's your goal? What's your plan 7 years from now, and so forth? Are you out of college? Are you on your second job? Are you an up-and-comer? Or are you looking to retire in 5 years? If you're looking to retire in 5 years, I probably wouldn't be a proponent of an adjustable rate mortgage. Okay, but if all these variables, that's what we're going to dissect and then come back and say, here's how the numbers work out. Here's what I would personally do, but you decide. I mean, that's what's great about this country. You can make those decisions on your behalf. What our job here is to educate and inform you guys what's out there, and what we would say is the most important thing of this. Okay, so yes, it might give you a lower payment today, but if you're looking at a 3-year ARM, I wouldn't do it, because it's almost certain that rates are going to be higher in 3 years. So if you need to refinance at that point, where rate's going to be? The minimum I would look to personally go is 5 years. I'd be comfortable, or more comfortable, on a 7-year. Okay, so that's my take on that piece of the business. Let's go to the next one. Is continuation to conditional approval. Does that mean application fees needs to be paid again? No. Continue. No, if you paid any fees and everything, that's the conditional approval basically means we're just looking or we're requesting some additional information, or we just need to review something. But a conditional approval is basically it's approved, but there's conditions still remaining. And then what happens after that, when we meet all the conditions, you're going to get what's called a CTC, or a cleared to close. So if you're conditionally approved, there's still some lingering things out there that needs to take place or needs to be done, or we need to provide the lender or somebody in that situation. But you shouldn't have to incur all new fees because of that. And but that's a great question, because a lot of the fees could really start adding up over time. Next question is, added a second job to double income. Does it count as income for my loan if it's the same field occupation? Okay, so here's how income works. So if it's a full-time job, you have a full-time job in the same line of work, you should be able to use it. Part-time jobs get tricky. That's the area where if you had a part-time job, let's say, and I don't mean any disrespect to anybody, but let's say you're a Walmart greeter. I'm just saying. And then you were there for 5, 6, 7 years, and now you went to Target and you're a greeter there. You can use the income. Okay, there's no job gaps or anything. It's basically the same pay and all that. You're okay. But if you just picked up a second job that's part-time, can't use it for 2 years. Okay, if it's a full-time job, that's another little tricky area. Might have some lenders that will take it. Might have some lenders that won't take it. That's one of the biggest reasons why I'm a mortgage broker. Gives me the option of choosing over 100 plus different lenders to use. So if you, let's say, for example, I worked at a bank and you gave me, you were in this process, and then all of a sudden you got a new job, but the banks had an overlay, and I'm going to go over overlays in a video this week. Let's say the bank had an overlay that they will not take a second job, period. Well, then now you can't use it. But some lenders, you might be able to use it. So that's where I like to be a broker. We are joining a bank to get a national affiliation, but we're actually going to work in a broker setting where we'll be able to use over 100 lenders under the bank's umbrella to be able to provide you not only the bank credibility of things, but also the services of a broker. So we're going to be a bank and a broker to offer you guys national coverage with the benefits of a broker. So that's what we're doing, and that's what I've been working on lately. And that's where some of the delays on my posting and so forth, because I'm working diligently in the background to help as many people out there as I can. For example, we have a lot of requests in New York. Up until this time, I had to say, can't help you. Now we can help you. So there's so many people out there that were requesting our help and assistance. We couldn't help, that I finally made a decision, went and sought out a bank that would allow us to do what we do under their umbrella, and we found it. So we're on our way. Do you still see a lot of offers over ask? I don't. And what I try to do is I try to reach out to realtors every day and have them on my show as much as I can, mainly for insight in their regions. So here's why. You have so many people out there they're just pumping fear and all this other stuff of it's going to crash, the world's going to end and all that. I'm going to get away from that. I just want to provide you the facts, okay? So we have a realtor, like I have Jeb Smith last week. He's talking about Southern California, okay? Then we had Sir Ashley, who's in Charlotte, North Carolina. It's a completely different market. So you can't say, well, the world's crashing, because Sir Ashley's saying, now all the offers are getting maybe 2, 3, 5 bids when they used to get 30 or 40. Jeb's saying the same thing. That coordinates, but it's a little different atmosphere. Jeb's market is $1, $2, $3 million homes. People that make multi-million dollars, they kind of don't care about the rates. And then we have on the other spectrum people that are very sensitive to rates. So that's why we try to help everybody and anybody with this context. But that's right now the realtors that I'm talking to all over the country are seeing a dramatic pullback in the number of bids. So great question. And that's why we do this format. And again, that's why I really want to just post the facts. I'm not going to get into the debate. The market's crashing, not going to crash. How the prices are going to go up at this. I'm going to get away from that, because it's like chasing your tail. Do you guys offer rate lock float, and how long are they good for? Selling current house within the next 30 days Okay, so here's what we have. If you're constructing a home, we can help you with our extended locks. Okay, that's called the extended lock. All right. That can go up to, in some cases, up to a year, but we can do 6 months and no cost, nothing really in it to kind of hamper you or lock you in to a particular lender. And I can explain that here in a second. But what we can offer you, and this is perfect in your situation, is we can lock you in right now on a 90-day shop and lock, okay? Or lock and shop. I had it reversed. Lock and shop. So we can lock you in today, and as long as you find a house and close within 90 days, good to go. So on our end, we're going to get you completely approved. So as soon as you find that house, all we need to do is really get the legal piece of that equation and an appraisal in the contract. We should have you ready to close within probably 10 days, as long as we can get the appraisal back in time. What was the other one? So the lock, if you're building a house, we can lock you up to 6 months. There's no points, there's no upfront fees, there's nothing. Once you go over the 6-month spectrum, now there's some, I call it skin in the game. Now you have to pay maybe a point or a half a point or 3/4 of a point up front to kind of have skin in the game for us to be able to lock in your rate. And that's common throughout the whole country. And again, we're a broker, so I'm not the lender. These are lenders we have all over the country set up. So in your case, I would apply now, Anthony, and we can lock you in. Today, rates are getting worse. But I can probably see rates by the end of today being up at least an eighth. So that's why I would highly suggest locking in now. And let's say rates just plummet from here. It's deemed that there's a recession on and the world's going to end and rates plummet. Well, we'll just move you over to a different lender and get you the market rates at that time. So it's basically a win-win-win for you. But that's the best way that I would do it. I would lock in now and while you're shopping. Next question, just bought an FHA house in February, which I was going to relocate for work, but that relocation was canceled last minute. How difficult is it to buy another home near my job with a 5% down? We'd love to help you, because if you don't get specific help in this situation, you're going to run into major issues. Because what's going to happen is, here's what we get a lot of times, is somebody will buy a house, they'll say it's their primary home. Then they'll look to buy another house and say it's their primary home. Then they'll look at another house and say it's their primary home. What's happening with some people is they're buying houses as investment properties. They know it's investment properties. And then they buy it as such because they can get away with maybe 3% down. And they buy that as an investment property. In their mind, that's what they were doing. But on paper, they bought it as their primary home. So then they get in with 3% down, and then they're like, wait, I want to do this again. I'll buy another investment property, 3% down. It doesn't work. It'll be greatly scrutinized. So I might even be involved with you personally if you're looking to do this, to help you with your transaction. And again, we're basically at this point national. So some of my teammates can help you, or some of my staff can help you throughout the whole country. I haven't moved my license over because we got about $6 million in volume that I need to close up in the next 2 weeks. So I have half my staff already federally chartered, so they would be more than happy to help you. So you can check us out, call us, do whatever. But DJ, if you do submit an application or call in or whatever, please tell them that I asked to get involved, so you don't hit a brick wall when we come down to the closing dates and so forth, because they're going to say, well, he just bought an FHA home that he has to live in. So we're going to need documentation and such, but we should be able to help you. So thanks for reaching out. Our information, let me get you the banner up here where you can find us, more about us. So it's right down below. Please feel free to give us a call, go online, whatever you need to do. We'd love to help. Next one, the first-time investment property. Should I go a second single family? Maybe. So for first-time investment property, should I go second? Here, if I were to do it again, what I would honestly do is I'd get a multi-unit. And let me retro back. First-time investment property. If I'm a first-time buyer, I would look at buying a multi-unit property through an FHA program. Why? You can buy a 4-unit building with 3.5% down payment. No other program is going to allow that. VA, you can get a multi-unit building for no money down. Okay, so those are the areas I'd focus in on. However, when I'm buying an investment property, me personally, I would get a duplex or a 3-unit or 4-unit. because you'd have more cash flow. You probably have more appreciation possibly on wherever you are with a single family home. But me personally, if I were to do it again, my first home would be like a duplex. I can live in one house and the other side actually pay my mortgage for me. So the more units you get, most likely the bigger cash flow you're going to have. Not always, but like I said, in this case, if you're looking for your first home, and I would look for a 2, 3, or 4 unit building and purchase that through the FHA system. That's just me personally. But and again, but also LA prepper, what's out there? You have to start dissecting each individual property. This property, what's your cash flow? This property, what's your cash flow? Then vacancy factors. Is it going to be hard to fill that void on a single family home if somebody moves out? On a 2, 3, 4 unit building, you're always going to have some probably revenue coming through. So those are my pros and cons. But again, it's going to come down also to the property value and how many properties are in that area that can you afford. So that's another thing that I would dissect there as well. Guys, if you would, please give us a thumbs up. If you're joining us, if you're asking questions, I can see only one person gave us a thumbs up. So just give us a little love and just click up. And then I'll shut up. Okay. You can't have 3 primary, correct. Yeah, you can have I guess you could, if you got enough money, you can have your primary home, a second home, and another second home, and another second home, but most people don't have that. But you can have a primary home and a second home, and those are treated as your primary homes. But I think if there's a specific question there you're missing, just let me know. I own a house now. Okay. Thanks for your thoughts. Alrighty, no problem. You have 9 thumbs up. I can't see them on my end, but thank you guys for those thumbs up. So if you have any more questions, let me know. What I'm going to talk about this week, like I said, every morning I'll come out and give you what's going on with rates. This week, I'm just going to say, how do you choose a lender? A lot of people just go on, I do this, or I Google search this or whatever. I'm going to have an open forum on Thursday on how you guys are choosing lenders. And then I would show you what I would do because I'm in the scenes. For example, if you're looking to buy a car, I have a nephew, family members that own dealerships and are in the car business. I know the insight. Okay. So that's why I'm like, if you want insight into the mortgage business, ask me. Okay. I got nothing to hide here. Ask me a question, I'll show you. I'll show you how we price loans. I'll show you how we, scan the whole system and do what we do. But again, my whole goal here is to educate you on the financing piece of the puzzle. I'm not going to really dive into what real estate is going to do. I don't know, and nobody knows. Okay. It's supply, demand, the Fed, the economy, supply chains, labor shortages, this whole ball of wax. And it is completely like throwing darts these days. And I don't like that because I like giving you guys the facts and the feedback. But today's world, if Federal Chairman Powell sneezes or he burps, the market's going all kind of different directions. And that's what I don't like in this. So I'll give you the feedback on mortgages and rates and where I think all this is going, but on the values. And if you should buy, that's your decision. Okay. But if you ask me a question, I'd be more than willing to give you my personal feedback on that. So if there's no more questions, we can end today. It's only been a half hour, but I know I didn't figure a lot of people be on here today because it's a day of playing catch up. But I still wanted to have the event, and I did a last minute post advising everybody that there would be one. So maybe that's why it's a little shorter than I thought it was going to be. But that's it for right now. If you have a last minute post, please give it to us. Otherwise, thank you so much for watching. If you have any comments you want me to, or videos you want me to talk about, put them down in the description down below or shoot me an email. My email address, let me give you that information. I will put it down below so you can email me personally. And it is my email, and I will be the one replying, and it's right down below. So if I can be of any help, please let me know. But otherwise, again, my name is Dan Frio. For the newbies out there, I do the rate update every day where I advise you guys on what's going on with mortgage rates. And then our focus going forward is going to be on the financing piece of the puzzle. What loan options are out there, what you should look for, all the intricate details in the financing part. But I'm going to leave the prices and the supply and everything else to the specialist. So that is it for right now, unless you have any more questions. Oh, we got one. Sorry about that. And y'all backed up on responses to email follow-up. Are y'all backed up on responses to emails, follow-ups, and inquiries? I am not. So if you sent me an email, maybe it was over the weekend and I might have missed it. But Justin, if you sent me an email, please go back in your reply, sent items, resend it to me. I promise you I will respond to you right as soon as I'm done here. And I apologize if I missed any of your emails. So that's it. If you're posting, please post. Otherwise, I will see you tomorrow morning with the rate update. Looks like that is it. So thank you guys. If you would, before you go, if you liked what you saw, please don't forget to give us a thumbs up, and I'll see you tomorrow.